Good morning, ladies and gentlemen. This is Alex here, Senior Account Executive at GDMFX with the European Session Morning Outlook. We'll start with the North American markets, of course. The ISM Manufacturing PMI is 1.7 points better than expected at 53.2. It grew in June at the fastest pace in 15 months, signaling a clear, if modest, uptrend after a bout of extended weakness, a survey of executives found. The market manufacturing PMI is 0.1 worse than expected at 51.3. ISM prices paid 3 worse than expected at 60.5. And the construction spending month on month 1.2% worse than expected at negative 0.8%. Fed's Fischer and Bullard both played down Brexit impact on the US economy. Stanley Fischer told CNBC that the Brexit will likely be less important for the US than other countries, though he did call it a negative for the global economy. He said the Fed will wait until closer to the two-day meeting ending July 27th to cement its views. The US stocks booked a fourth straight daily gain Friday, and the Dow and S&P 500 marked their best week this year as stocks clawed back some of the losses scored in the wake of the tumult that followed the UK's decision last week to sever ties with the EU. Better than expected manufacturing data combined with fading worries about the Brexit stoked appetite for equities. The Dow Jones was 8 points up, Nasdaq 40 points up. The Dixie is down to 95.61 from 95.92. USD Canadian dollar 50 pips down, USD Swiss franc 40 pips down, and USD JPY 65 pips down. Today's events in the US, it's Independence Day, and there will be no market events. From Canada, we have the RBC Manufacturing PMI and the Bank of Canada Business Outlook Survey. And that's all from the oh no, I'm sorry, that's not all. Actually, we have the FOMC minutes on Wednesday from the US, and unemployment rate and NFP. This is the most important event for the week from the US. This is on Friday. And that's all from the North American markets. Onto the EU markets. European indices also kept up its recoveries post-Brexit on Friday, ending higher. On Friday, the ECB discussed loosening bond buying rules as an option for the future. The ECB is concerned there may not be enough depth available to buy under current criteria following the continued fall in bond yields after last week's Brexit vote, the report said. The jobless rate in the Eurozone in May fell to 10.1% from 10.2% in April to reach its lowest level since July 2011. The EU Statistics Agency said Friday. Also released in the morning, a market purchasing managers index for manufacturing in June rose to 52.8 from 51.5 in May, which was higher than expected. Given the uncertainty caused by the prospect of Brexit, it seems likely that business and consumer spending will be adversely affected across the euro area in the short term at least, pulling growth down in coming months. This week's most important events are on Wednesday, when ECB President Mario Draghi will be having a speech, and there will be a non-monetary policy meeting. On the next day, Thursday, is the monetary policy meeting accounts. Alright, on to the UK markets. We had the market manufacturing PMI come out 1.9 better than expected at 52.1. The sterling halted its biggest two-week drop since 2009 after the UK government has unveiled some of the measures it will undertake to steady the economy after the Brexit vote. The Chancellor of the Exchequer, George Osborne, introduced a lower corporate tax of 15%. Mark Carney from the Bank of England is also going to unveil the macro-prudential tools the Bank of England has created after the last financial crisis and how the Bank of England will use them in the current crisis. Both of these events halted the sterling's slide to the downside and boosted its prospects in the early Asian session. Nevertheless, the overall expectations for the pound's performance in the long run is to extend its losses to levels in the range of $1.25 versus the dollar. The FTSE 100 gained 65 points and closed at 6,529 on Friday. And the bigger movements on the pound were against the Australian dollar, 225 pips down Friday, 260 pips range. And against the New Zealand dollar, 200 pips down on Friday, 270 pips range. This week's more important events from the UK are the construction PMI, the financial stability report, the industrial production month-on-month and year-on-year, the manufacturing production month-on-month and year-on-year, and the NIESR GDP estimate. Alright, on to the Asian and Pacific markets. We had some inflation data coming from Australia during the Asian session. We had TD securities inflation month-on-month 0.8% better than previous at 0.6%, and year-on-year 0.5% better than previous at 1.5%. Australian shares notched their strongest weekly advance since mid-April, rising 2.6%, led by gains in mining stocks. The Bank of Japan's latest Tankan poll, a quarterly survey of business confidence, was out Friday. It showed sentiment among banks hit its lowest point in 3 years in the April-June quarter, while manufacturers' sentiment remained solid. Australia is having an interest rate decision on Wednesday, and on Thursday, Bank of Japan Governor Kuroda will be having a speech. And that's all from the Asian session, the Asian markets. Onto the commodities. The Baker Hughes oil rig count, the number of rigs drilling for oil in the US increased by 11 last week to 341, marking the fourth increase in 5 weeks. Oil futures were steady on Monday following comments from the Saudi energy minister that the market was heading towards balance, although signs of slowing demand in Asia weighed. Silver was very interesting. It surged 3.6% to $20.43 an ounce, breaking the $20 level for the first time in nearly 2 years. Gold prices rallied on Friday, closing just below a 27-month peak amid fading expectations of a Fed rate hike in the next couple of months, and as investors continued to digest the political and economic aftermath of the UK's decision. S&P 500 index had a range of 19 points on Friday at 2,098 now, is going sideways. Gold had a range of $24 up to $13.47 now. Silver had a range of over $1 up to $20.38, as I mentioned. Crude oil had $1.40 range up to $49.06, and natural gas is trading at $2.87 at the moment with a range of 10 cents. That's all for this morning's outlook. Thanks for the attention. I will see you next time. Goodbye.